Okay, hello everyone. Welcome to our Communo webinar with our partners from Paro. Today we have Michelle and John with us, and they are going to give you some advice of how Paro can help your business grow and make your finances an asset. So we'll just go into quick introductions really quick. So we'll start with ladies first. Michelle is a freelance bookkeeper who's been in the industry for 25 years. She has had over 200 accounting clients and currently runs a freelancing bookkeeping service firm with clients from several industries, but she has always had a passion for working in the creative space. Michelle works with clients to have actual data to find greater profitability and gain a better cash flow, and who doesn't love a better cash flow? Lots of cleanup work experience to prepare for loans, taxes, and exits. Michelle also has a business builder program to ultimately lead to a more valuable and sustainable business practices. So welcome, Michelle. Then our next presenter is John. John is Paris's VP of Financial Consulting and oversees its consulting, sales, and business development efforts. After grinding his teeth as a strategy and operations consultant with Deloitte's finance practices, and as a senior manager of growth for a mid-market technology company, John found his passion helping small and mid-sized businesses make finance a competitive advantage. John is a huge component of deploying the 3 Ps, people, process, and platform, to enhance agency financial performance. Yeah, so we're super excited to have you guys here today. I think we can all learn a lot from this webinar. How are you guys doing?
Doing great. Thanks for the intro.
Yeah, great. I couldn't have wrote it better myself.
Awesome. So just before we begin, I'm just going to do a quick poll here just to kind of get everyone, we can get a little bit of data of how everyone's feeling today, of how do you manage your finances. So go ahead and answer that to everyone in the audience. Awesome. Looks like we've had a few people vote. I am going to be heading off the call now to give the floor to Michelle and John, who are much more knowledgeable to speak on the topic than I. But before I do, just we will have a Q&A at the end, so send in all your questions, and please use the chat feature and interact as much as possible. Awesome. Well, I'm going to hand the floor to you guys, and we'll see you in a bit.
Thanks so much for the intro and for having both Michelle and I here this afternoon or this morning, depending on your particular time zone that we find ourselves in on this Tuesday. Really want to move on from Paro and onto the value we can provide as quickly as possible. But in short, Paro is a marketplace actually very similar to Communo, but solely dedicated on the finance and accounting vertical. I feel pretty blessed today to be sharing the panel with Michelle Peterson, who's one of our utmost, I know Dennis had mentioned a bookkeeper, but skill set extends to me through accountant, through controller, all the way up through a CFO, and was actually selected for this panel because of specifically her experience in the marketing agency world. And so we're really excited to run through a tight but hopefully very value-add agenda today, starting with making sure your back office is set up for success from a tool and a process standpoint, or the platform and the process in terms of 3 Ps. From there, we're going to extend to, at the high level, is your agency profitable? How can you make sure that those economics make sense? Drilling down to client level profitability, and wrapping with a bit of a deep dive into pricing proposals and how that can be optimized. Roughly speaking, we want to spend about 5 minutes per topic. And though we do have Q&A at the end, we would love to hear from you all in the interim. Please do use the chat feature, ping anything our way. Believe me, you're not going to be able to throw us off, and we'd love some engagement as we get going. Michelle, anything else to add before we jump into tools and processes?
No, let's go for it.
Perfect. So, key question to ask, how can you operate your agency most efficiently? And before we get into any of the granular accounting jargon or setup or strategy, you got to make sure you have the right foundation. So Michelle, where do you kind of start as you're evaluating a new agency or a new prospect? What are you looking for?
When I first get into contact or someone contacts me to look at their books, we set up a call and hopefully I have their books in front of me. But I'm looking for a couple of things. I'm looking, first of all, how is their chart of accounts, the basics? How is their chart of accounts set up? Is it useful? Does it look like a CPA set it up with a bunch of numbers on every account? Are they involved? Or did some of a DIY approach, or non-existent even, what kind of bank accounts are involved? So I look at that kind of thing. What challenges do they have just in the basics? Then I want to look at key numbers. What is their profit margin? What is their gross margin? Are they even tracking gross margin? And where are they keeping their payroll? So some of those kinds of things are big indicators that they have a foundational problem or not.
Or not. So when you talk about chart of accounts, let's go all the way back to basics. Accounting 101, where pimply faced 18-year-olds in that first undergrad class. So, what are you talking about when you mention a chart of accounts?
Okay, so a lot of people want to know where the money's going, right? So you need to, first of all, have a place to keep your money and not commingle it with your personal bank account. And so then we would move on to what do you owe people? So we start looking at liability accounts. Who do you owe money to? Then we want to look at where your revenue is coming from and how many revenue accounts are there or should there be. In this space, in the marketing space, maybe you'd have a revenue account that accounted for website design, and then you would have one for SEO services or something like that. So you would have multiple revenue accounts. The gross margin or the cost of sales, maybe direct labor, direct freelance support, direct ad spend on Google AdWords might be a direct cost of sales. So those would be that would help generate your gross margin percentages. And then your fixed and variable overhead expenses, rent being a very fixed example. And I use rent as a metric for a lot of things. A variable expense might be advertising, actually, is a variable expense. I don't know how much marketing agencies spend on advertising, but for a lot of small businesses, that would be a variable expense, and it should go up and down according to your income. So those are the positive sides, or the bigger overview. I've seen such things as, the other day I saw somebody set up an account called Bottles, and it's like, what the heck is Bottles? And it had several $1,000s in it, and I go, what. It ended up being, it was a winery, and they ended up bulk purchasing bottles. And so it should have been a cost of sales, but they had it buried in the expenses, and it should actually part of be inventory. So those are the things, the 101 that I would see that maybe somebody who didn't take accounting 101 wouldn't see.
So it sounds like a lot of organization, making sure things are categorized and organized correctly. Are there any tools that you recommend to stay organized? And just, looking at the slide, it seems like we want to try to find that Goldilocks zone in the middle. You don't want to just invest in technology tools, every new shiny whiz bang gadget. Oh, we want to invest in that because it's going to help me. We want to avoid those redundancies, but also it's pretty hard to manage a business on pen and paper. So is there anything you'd recommend as kind of from a small to a medium-sized agency that they make sure they have that technical foundation?
My go-to is QuickBooks for your accounting system. I know there's a couple of others that let people like FreshBooks and Xero. Not saying anything against them. QuickBooks came around in 1998, and I was there when they did, and so I've been in love with it since then. And they are just a standout system, and they do a lot. The bells and whistles there take a little bit of a learning curve, but I think it's a great system. Payroll, I think, this is my fundamental belief, I believe that a payroll service should do your payroll. You shouldn't try to do that in-house. It's a lot of time. A system improves the efficiency of that greatly. It also protects you. It makes sure things are filed on time, and you don't get a lot of penalties with that. There's a couple of other things depending on the quantity involved, like bill pay for vendors is one that I've seen successfully used. It's expensive, so if you don't have a lot of vendors that you have to pay, it's probably not worth it. But and then another one would be an invoicing system, which usually is tied to some sort of project management system. So I've seen that used a lot in this space.
Ton of valuable advice in there, Michelle. So I just want to recap for the group. Your general ledger, that core accounting system, it's tough to beat into it in the QuickBooks suite. Understand that there are alternate platforms, Xero and FreshBooks and the like, that are just as well. Understanding you're going to have a bit of a rougher time finding talent that is truly experts in those software, given the ubiquity of QuickBooks. Bill pay. As the bill volume increases, investing in a tool like Bill.com can really help automate those flows. But again, juice has got to be worth the squeeze. If you only have a few transactions, it's not going to be worth investing in that. And I will double down on everything Michelle said about investing in a full service payroll tool. We have about 2,000 clients at Paro. I've personally onboarded hundreds myself, and cannot advocate in more stronger terms. Please don't try to do this yourself. Lean on automated software. It's going to keep you in compliance. It's going to keep you on time and out of your hair. About the best, however much, $3 per employee you can spend, in my humble opinion. And not to be forgotten, proposal lifecycle. That integration with, say, your QuickBooks instance keeps everything clean, keeps you organized, nothing to reconcile. It's all one source of truth. So ton of great suggestions there, Michelle.
Great. And the one thing also is the integration, and I'm glad you brought that up, is the integration of the different systems that you do have. So if there's any way that it can be integrated and not manually entered after the fact, that's a plus.
Double on that as well, right? Take the reconciliation out of it. You would have the same system. There's nothing to reconcile. There's no variance to be introduced. And so, now that we've got our technical foundation, our platforms, and some high-level processes, let's extend the conversation into profitability, because at least to myself, the difference between a hobby and a business has to be destined to make money. And so we have another poll up on the screen, and it would be really helpful to understand in terms of the group, where are you most and ideally least confident when it comes to your finances, between the rudimentary processes that we just ran through, the month-end close, the invoicing, the payroll, et cetera, compliance, tax, and the like, or some of the more complex financial topics, when it comes to budgeting and forecasting, or cash flow management, or even your growth strategy. So I'll give everyone a second to chime in there. And with that context, Michelle, let's start talking about, that highest level, that agency level financial foundation. Is this business, does it make economic sense? And so some of these topics I heard you already introduce on our last slide when you spoke at the chart of accounts. And so do you mind just revisiting, why is this term granularity so important when it comes to your accounting, your financial reporting?
As a business grows, it becomes more and more important. And one of the things that I find so frustrating is that we don't have to live with the reports the way they are. You can create inside of QuickBooks, you can create a report that's useful to you, that you can pull out anytime and say, okay, I want to see what my fixed costs are, what my variable costs are. And am I staying within my spending plan or a budget? A lot of people call them budgets. I like to call them spending plans. People tend to prefer that. Give me permission to spend my money. But anyway, to get your baselines discovered, that's within the first 3 months of us working together, I would want to get some baselines figured out. We've got to clean up, then we move on to baselines. Then we have a goal conversation or a spending plan conversation. Where do you want to be? How do you, is debt a problem? Is cash flow a problem? Is profit a problem? Is revenue a problem? Is pricing a problem? And where are all the baselines in all of that? And you kind of need to know what is your fixed cost and variable cost to really get a good picture on that. And I don't see this set up very often, but it's a matter of putting a parent account in play on your expenses. But I don't see it set up all the time. And so once we do that, we can get some reports that are useful to the business owner, because you want them involved. It's not one of those things, let's outsource this and then we'll revisit at tax time.
No.
It's not wise to do that. It's, you're running by the intuition instead of, by the facts. And I think intuition's good when it's mixed with facts. And so that's kind of where, in this space, one of the great metrics to measure is revenue by employee or revenue by FTE. If you're using freelancers, by how many full-time hours are spent and what is the revenue per that, and can we grow that? And if you're measuring that month to month, quarter to quarter, year to year, you're bound to improve.
And before I add anything new, I just want to rehash a few of the just gold tidbits that Michelle just left there. Run your business on actual data, not on intuition. And ideally, that should be run in real time with up-to-date financial reporting. In terms of this delineation between variable and fixed, something that I hammer home in all of my consultants as they're working with clients. Everyone, there's a preponderance to get so focused on that bottom line, how much profit am I making, that you miss, to me, the second most important line on any P&L, on any financial report, and that's your gross profit line. And the reason, when you take out those variable costs, it lets you calculate your break even. How much business do I have to perform, do I have to execute to at least cover my fixed costs, that rent, that insurance, any salaries that are unchanged? And all of this comes back to that accounting foundation. If your chart of accounts is not set up correctly, that you have these accounts split out, you're going to be flying based on intuition. And that's how you get lost in the clouds and unfortunate things happen. And to kind of round this out, I love where Michelle left this of a baseline financial. All of this brings you to a point where you can actually take an objective look at how you've been performing. And pretty timely, actually, results from the last poll. 40% of attendees today were at least comfortable with that forecasting, budgeting, FP&A, we call it in this space, financial planning and analysis piece of their entire finance and accounting infrastructure. And it is foolhardy to start talking about budgets, or as I'm going to steal Michelle's term, spending plans, without having accurate baseline financials. So before we can get into any of the fancy stuff, setting plans, setting budgets, setting spending plans, tracking our results, you really have to have a rock solid foundation of actuals. Anything else to add to that, Michelle, before we can keep going from the aggregate down to where I think it even gets more fun, which is client to client variability?
Okay, yeah. One of the things about the reports and actuals, it's important to know the difference between an accrual report and a cash report, because, and I think we touch on this in a future slide, but it isn't your money until somebody pays you for it. If it's sitting on, you have accounts receivable sitting there, you would see that on an accrual statement, and you would not necessarily see that on a cash statement. So it's really nice to look at those two things side by side and get a good metric on your cash flow. Another
phenomenal recommendation, running things in both, cash and accrual basis. And I know we're moving quickly. We have a somewhat limited time today. But if there's one plea I have, please don't be intimidated by financial jargon. We've spent years in this space. We're here to try to help break these terms down. But if any of these things, you do have questions, chime in. And of course, we'll wrap. Would love to connect with anyone one-on-one to break these concepts down. Promise it's not as intimidating as it may appear on the surface. So once we have this baseline, we understand what our chart of accounts should look like. We've got a spending plan in place. Typically where we look next is client level profitability. Why is that, Michelle?
In a service business to business kind of model, with the business to business, like a lot of marketing agencies gotta be, you may get to the point of capacity issues. Do you hire more help, or do you fire a client? Do you raise your prices? And the only way to get to the right answer, and it's probably a combination of all of those things, but the only way to get to that is to know by client or by project. I don't know if you have to have both, but I think I think I would lean towards client profitability when I'm asking myself, when I have capacity issues, what is my client profitability and why? Why is one client more profitable than another? And should we direct our energies that direction, get more clients like that client, or do we have an employee problem where one is more detailed and drags their feet a little bit more in the weeds than another? And what is the customer experience like? Maybe that person that's faster isn't given enough customer service. And so these are the kinds of things that kind of level of tracking will answer for you, or at least bring up questions that you can answer or dig into.
No, I think those are great examples of, real world examples of, is a customer service rep or an account manager investing too much or too little time? And how does that not just impact your client experience, but how does that impact your agency's economics? To me, any professional services model, the ultimate goal is utilization.
Mm-hmm.
And they have to be the right level of utilized. Underutilized, you're hemorrhaging cash. Overutilized, your employees suffer, your clients suffer, the quality of that work suffers. And so it's really about finding that balance, and breaking things down on a client by client or project by project basis is a huge stepping stone helping you take control of that utilization function. We actually understand how are your resources being allocated. And so, Michelle, maybe can you just elaborate a bit on, I think we all pretty intuitively understand allocating your internal resources across client projects, right? There's only so much bandwidth any human being has. But what about some of those other costs? How do you get a true accurate gauge of client level profitability for some of those costs that maybe aren't directly attributable to a client? Like, as you brought up at the start, your advertising budget for your agency in general.
Okay, and so that goes back to what is your true overhead rate? Your fixed and variable kind of get combined in there to find your true overhead rate. And so say you come up with that in your baseline. You'd want to, in your baseline analysis, you would want to know what your true overhead is, not just your fixed, but what is the variables that go along with the type of project. And I would go with, let's just throw out website design. There's going to be some variable expenses with that. And there's also going to be some fixed cost, such as the computer. Okay. The computer costs you something. And so what is that rate? I always use 30% as kind of a guideline. And, when you know the direct cost that you build that client for, are you also recovering your 30% of your overhead, your true overhead? And are you also recovering your desired profit? Say your desired profit's another 30. So are you recovering, are you getting that profit as well from that client that you expect to get from the client?
Thank you for elaborating that. I think it's super helpful. I'm getting another poll just before we continue. Annual budgeting process fairly timely. If it's not clear, I create an annual budget and track it early and often, but we won't get into that quite yet. So Michelle, it seems like these are all really great suggestions. Tracking things by client, creating a way to calculate my true overhead cost. It also sounds complex. Like, how do I get started doing this, or what direction ideally can I, as an agency owner, provide my accounting professional or my finance team to start producing these reports at a level of granularity that's going to be more useful to me as the business owner?
Since I love QuickBooks so much, I would obviously go there and run a report. Let's say it's set up, with fixed cost and variable costs separated out, and your cost of goods separated out, or cost of sales separated out. You run it with the percents on the side, and that those targets. I would ask the question: what is the profit margin you want? That I kind of start at the bottom. If I could, I'd switch it. I'd flip your report upside down. I would start at the profit and say, is there enough profit to meet my debt and my personal owner risk that I desire? Is that 30%? Is that 40%? Each business is going to be different, and what they can and cannot do is going to be different, just based on how their culture and how they approach their cost and their, some companies won't even go into debt at all, and other companies will leverage other people's money all day long. And so, what is that? And let's work ourselves backwards. And if you have that percent, then we need to improve that profit percent by 5%. That means somewhere along the line, we got to find that 5%. And if that doesn't happen, and I always say it's easier to make more money than to cut expenses. So let's fine tune your expenses, but let's don't spend an elaborate amount of time trying to cut those. Let's figure out, how do we get more money from our current clients? How do we get more money from our service offerings? Do we create better, from one client, maybe we add on SEO services as a bundle, those kinds of things. If you're not thinking about that already, that would be a good starting point.
So before we wrap, because that is our final slide about bundling and pricing best practices. Just last question for you, Michelle. How do you start to break these things down by client? How do you understand the nuances or the idiosyncrasies, not in the client personality, but rather in the client's financials? How do you even start to track those differences?
I'm not sure I understand that question, John.
I was trying to lead you to, the class tracking. What
okay.
is class tracking, or how can, these agencies start to employ it?
Okay, so there's two methods. Within QuickBooks, there's two methods, and class tracking is one of them. A class could be the client's name, or it could be a project names. Say you're doing a big website project for an airport or something like that. It could be airport website, could be the class. And then you also have the client's name could be attached to any transaction. The class can be attached to any transaction, whether it's an expense or revenue. And the other new feature in the last few years is actually a project feature. And so you can force all your transactions to be recorded against a project. And of course, that's not overhead, but the actual expenses, your freelancers, and then you can pull a P&L and a balance sheet. Or I don't know if you can pull a balance sheet, but you can pull a P&L on a project. And so that's really a cool feature.
Thank you for taking us into the weeds of how that sausage gets.
Sorry.
No, because that's exactly, my hope is that no one on this call is actually trying to execute on these things, but that you're able to talk the talk and explain. I heard on this webinar talking about class tracking, how I can look at my clients on a one-off P&L basis. These are things that any finance and accounting professional needs to be able to deliver to you in short order.
Mm-hmm.
And in terms of wrapping, sorry, I cut you off, Michelle, but now I want to let you go. When you're talking about maximizing profitability by client, what sort of guidance or consultation are you providing your professional services clients about, where they should start, or what stones they should be looking to turn over?
It's funny because I can look at this from both directions. I can look at it from the clients these marketing professionals serve, and I can look at it from the marketing, bookkeeping angle too. And when I'm working with, say, a lawyer, an attorney, and I look at their advertising dollars, is there return on investment here? And are we delivering? Are we as efficient as we can be with those dollars spent? And that's the general message. Are we as efficient as we can be with every dollar that we spend? Are we as efficient as we can be with every hour that's billed out? And I hate billable hours. So going on record, I hate billable hours. And the only way you can go up is by charging more per hour. And, when I call the attorney, I'm spending every 6 minutes, spending money every 6 minutes. I don't like it. I'd rather do fixed fee stuff and retainer type of revenue. Although I'm kind of leaning away from retainers as a recommendation in this call. But recurring revenue and fixed fees creates such a value. There's one thing we haven't touched on, and I know I'm running out of time, but one thing we haven't touched on is your exit strategy. like it or not, and I owned a couple of cemeteries, so I know this for sure, that everybody will exit their business at some point, hopefully voluntarily, and hopefully for the price that you want. And so creating recurring revenue streams and creating fixed pricing fees with contracts will take almost double your value, what you will get at the time that you try to sell your business or get acquired by another business. So it's a huge, huge thing to consider. And I know the typical creative person doesn't ever think they're ever going to leave their business. So it's somewhat of a conversation that I always have a difficult time having that conversation. I call it the EGO effect, eyes glaze over, when I'm having that conversation. But it's real.
That's why we're glad to have professionals like you in the world, Michelle, to be able to have the eyes glazed over conversations. And I will second everything that Michelle was explaining about the difference between fixed fee and billable hours and those recurring revenue streams, not only in terms of the value to your business, but in terms of the stickiness of your revenue. Paro went through an entire evolution just over 2 years ago after launching from an almost entirely billable hour standpoint to fixed fees. And I think it's, though the functions, finance and marketing may seem disparate, so much alignment when it comes to these things, where you don't want your clients thinking that they're on the clock. Every 6 minutes they're being billed revenue. They actually want to lean on you less because they think they're getting charged for it. And this value-based billing, not only does it provide you the opportunity to invest as much time as you need to, it's a predictable expense for the client. And I found that piece, that predictability, even if it is marginally more expensive, is more attractive than variable where they don't know what to expect. Even if it does cost less, as counterintuitive as that may sound. I could talk for the next hour about recurring revenue streams. But.
John, I want to share also, when you're looking at a billable, I talk from the attorney standpoint of the potential client. When you look at somebody that's billable hours and they're, say, $30 an hour, to build my website, versus another agency who has it for $1,000, a fixed fee or something like that. That $30 doesn't take long to spend. You think you're cheaper, but you're not. And so, even like with me, I've got 25 years. I know I'm faster than the person that just got hired in somebody's office for $13 an hour or $15. I know I'm faster. And so, when you spend, what is it now, close to $32,000 for an in-house bookkeeper, you can get away with $12,000 when you outsource it. And I think the same theory applies to the marketing agency dynamic.
I do as well. And, maybe we'll have a follow-up session about one of my favorite topics in business, which is contingent fees or success-based fees, where as you can show an ROI, say, on how you're managing an SEO team, you can actually very much undercut that recurring revenue stream. But we'll save the extra credit stuff for our next session. Before we just open it up to Q&A, I did want to remark briefly on some of the polls. If there's one thing that I think is, I'm excited about the opportunity, candidly gives me a little bit of heartburn. 75% of our respondents are not setting an annual budget and tracking it at least on a monthly basis. Having led businesses, fundraised businesses, been a CFO of business, consultant businesses, if there's one thing outside of accounting you take away from today, please hear my heartfelt plea. Set your budget, set it at the beginning of every year, and don't forget it. Go through and set up correctly with a pro like Michelle. This takes minutes a month to run your budget versus actuals, understand those variances. And to me, that's where every conversation with your finance professional should start. Where am I on plan? Where am I off plan? And then you can start asking that ultimate question, why? And that's where finance, to me, can actually start adding some value. Michelle, did the polls or anything else come to mind before we kind of open up the floor to Q&A?
I do everything myself. We had almost, a good chunk of people do their bookkeeping themselves. And so, if you want to continue that way, I don't care, it's your business and I want you to be successful and however, but I wonder if that's the best use of someone's talents in the creative space. But invest a little bit in just having a conversation, of what else can I do? What else should I, what are my standards? And where should they be with either your CPA? Because that's another thing. The CPAs aren't being asked questions. We're getting through the taxes, but they're very useful. They're very knowledgeable people. And so reach out to them post-tax season and have a little review of your financials. And if they can't give you anything, find another CPA.
Took the words out of my mouth. But let's say we're giving the legacy CPA the benefit of the doubt for now. My question for you, Michelle, before we open up to the floor, are there a question or two that you would recommend our attendees today bring to their CPA? Taxes are filed, year in review. Where do we start that conversation? We all know, wink, wink, maybe CPA is not the most gregarious individuals. So how do you start that conversation? How do you get that conversation flown in a direction that's going to add value to your business? Anything you'd recommend?
Yeah, and keep in mind, CPAs want to minimize your taxes and I want to maximize your profits. And so those are two opposing views. So, if you want, it's okay to pay taxes if you're making more money. And so that, what kind of, I would ask my CPA, what else can I do, or what's out of line here? Is there anything, because they deal with lots of clients every year. What's out of line on my financials? And, what can I do differently? Surprisingly, sometimes the CPA will say, well, you should probably buy some new equipment. And the reason for that is because there's a non-cash deduction. If that helps you, great. If new equipment helps you to make more money, great. But I don't understand it necessarily. All you're doing really is spending money to pay less taxes. And so those are the kinds of things that you could get me going on this for a long time. I don't want to offend my CPA friends.
That's fair enough. But I will just remark, such a salient point Michelle made that, as a business advisor, her goal is to help you make more profit, which is diametrically opposed to the DNA of a tax accountant, which is how do I minimize your taxes as much as possible? And ultimately, you have to be the driver of your agency's financial health and whether these investments are justified and what makes sense for you. So I did get one question pinged over, and it's an oldie but a goodie, and I think especially present in these times that we find ourselves in with pandemic market uncertainty. Michelle, how do we improve cash flow?
Besides eliminating debt.
Besides eliminating debt.
The number one thing you want to look at is the timing of your client paying you and you paying your employees. That would be the number one area that I often see as the biggest area of improvement in cash flow. Then, or the easiest maybe, the second, which gets me jazzed up and I do head tapping and all kinds of things, and that's changing your pricing structure.
Yeah.
And, looking at opportunities in that area. I love looking at bundling. I think bundling services together is the ultimate profit center, and unlimited services aren't truly unlimited a client isn't going to use you unlimitedly. They have time, they have to do other things, but to say it's unlimited and to be able to charge a premium for that is amazing revenue stream when you analyze it. Those are the big ones. Paying off your debt would be obviously another one.
Pay off your debt, and then I'm sorry, it's just too strong of a segue for me to let go in terms of wrapping this up and ideally what we can offer. After going through these things in terms of value-based billing, understanding that clients, marketing agencies of a certain size can't use unlimited bandwidth, we're really excited to roll out a comprehensive package that we can help an agency who maybe you're asking some of these questions to your CPA, and I don't want this to come off as a sales pitch, but we're here to help. And if any of these concepts in terms of integrated budgeting, variance versus actuals, that month-end close, having someone like Michelle, an industry vet, to lean on for strategic guidance from everything from pricing to your technical setup. I think that, we can come with a very cost-effective package to be able to help you. Short of any package, we're here to help, and I'm really excited to offer complimentary one-on-one financial assessments. And if we want to make it 2-on-1, I'm happy to join the conversation with Michelle. Easiest way to get in touch, on our Communo page, Paro, P-A-R-O. We have a dedicated rep standing by, and as fun as this has been in a group setting, I think they're all the more fun when we can actually talk about your business, your technology tools, your clients in detail, and help put you on a path to greater profitability. So my big ask, if any of these topics started to light a little bit of a fire, engendered some more questions, we're here to help. We'd love to continue the conversation. Michelle, anything to add to that before we turn over to Denon to wrap?
No, it'd be a pleasure. It'd be a pleasure to serve in any way I can.
Awesome. That was a great webinar, guys. As someone who is in marketing and accounting was never my strong suit, accounting, finance, all those classes you have to take in university, I think I was able to learn some things. We do have another question in the chat here. Yeah. Matt asked, what types of levels of insurance should small agencies or solopreneur consultants have?
I'll start this off at a very high level, and Michelle may be able to go into more detail. Please make sure you're covered from a general liability standpoint. In our world, errors and omissions is critical. The last thing you want is a fat finger on a keyboard that has a downstream negative impact on a client, say tax filing, to come back and bite your agency in the ass. So from that standpoint, there are certain things just from a general liability standpoint, really no business, even if you're a single owner LLC, just starting off on your own, that is not the place to trim costs in my humble opinion. Michelle, anything to add to that?
No, that's exactly what I would have said. I might add, if you have a partnership to do key man insurance, that would be, or if you have a super important employee, do something like that, if something was to happen to them. But yeah, that's the high level answer to that one.
So we talked a lot about budgeting today, and we had a few polls about it. A lot of freelancers I talk to, they don't know what their revenue is going to be for the year. It really alters month to month. So what advice would you give to freelancers whose revenue does alter quite a bit every month to set a budget for the year?
Yeah, I'm going to jump in on this one, John. What I see is this: peaks and valleys, peaks and valleys, peaks and valleys. So when you're not selling, you're doing, and when you're doing, you're not selling, and that creates this fluctuation. And if you're just starting out, did you say?
Yeah.
If you're just starting out, you start out with what you need. You look at your overhead, your fixed cost, and then start out with what you need, and month to month, and try to go from there. And look, if you're looking at it every month, you can adjust your budget. Nobody says it's made in concrete.
Mm-hmm.
Right. No, I think that's great advice. I mean, definitely alter every time you can. Right.
And I can't help it, but just in terms of this theme of fixed versus variable costs, even if you're just starting out, you want to minimize those fixed costs as much as possible. Ideally, if you're a solopreneur just getting started out, you want to eliminate those fixed costs. Maybe you've got a couple tech tools that you're paying monthly subscription revenue that you can cancel if you need to. The last thing you can afford with uncertain revenue streams is to take on a bunch of fixed investments that you're going to be paying down regardless of how a business transcends.
Right.
So, do we have any more questions in the chat? Now's the time to send them in. Yeah. All right, awesome. Just in case any more questions come up while we just wait here, I am just going to put an offer on the page that will take you to Paro's site. Here we go. Okay, you guys should all be able to go there. And like John said, I mean, obviously webinars like this are great. However, there is just so much more benefit to having that one-on-one conversation and really getting advice to your business tailored to you.
And I can't emphasize this more, and I hope Michelle doesn't mind me speaking for her. There are no obligations with any of these things. This is what we do. This is what we live and breathe day in and day out. And the ability to give back, provide some direction, that's all the value we need. If we can help out more formally, all the better. But we do hope to be able to hear from as many of you as possible and continue these conversations offline.
Right. Yeah, totally. And actually it's a joy for me to talk to a business owner and help them be better in any way I can. And I feel like that's my calling, and so I'm here.
Awesome. Okay, great. Well, it doesn't look like we got any more questions in the chat, so be sure to reach out to Michelle and John offline from Paro's website, and they'll be able to help you out there. I would like to thank you guys just for coming on and talking to us. It really means a lot having you guys as a Communo partner, and having you guys come on here and add value to our community. It means a lot to us and our members.
Thanks so much for having us. It was fun.
Yep.
Yeah, well, thank you guys so much. And if you have any questions, you know where to reach them. And yeah, have a great day. Stay safe and healthy.
Sounds good. You too. Bye, buddy.
Bye-bye, everyone.